Hey everybody and welcome back to my channel. It is currently the Easter holidays and it is a perfect time to carry out some backtesting. Recently I've been working on a super tip to help me to increase my winning trades, and that's what I'm going to test in my backtesting process, and that's what I'm going to do in this video today. So join me as I carry out some backtesting, testing this new theory, this new strategy to gain a lot more profit from my winning trades. I'm also going to share with you an insight into a trade I currently have running live over the Easter holidays, so we'll break that all down in just a moment. As always, all of the software that I'm using will be linked in the description below. Make sure to like and subscribe, and let's get straight to it. Hey guys, so I'm going to get straight into this video today, and here I am on my charting software on TradingView. It's a platform I've used for many years now to actually carry out my technical analysis, and I certainly recommend it. And this is actually the trade that I have running at the moment. Now I got into this trade at the beginning of this week that's just gone, so I got into it on Tuesday the 26th of March. And I actually set two positions. Now this is a bit of an experiment. If you follow my journey, you'll know that I actively day trade pound dollar, and generally I tend to stick to day trading, maybe even scalping, where I have a tight stop and I have a small profit target and I sort of get in and get out to reduce my risk exposure. Well, this is slightly different because I've taken out two positions. So you can see here, I got into this on a simple break and retest. It was a rejection of the previous daily high here, this pattern and the strong momentum candlestick down. This little retest here, I got short, but I took out two positions. The first was just using a tight stop, and a target was down here, which actually hits during the evening. So I've already taken some profit off the table for this trade, which is a nice cushion to just take me through the Easter holidays, because the trading volume really drops over the holidays. It gets a bit quieter, and personally, I'm looking to spend this time with my family, so I'm not going to be on the charts every day. So I've decided to sate my trading appetite to leave a winner to run. And this is something that I have dabbled with for years. I have been aware of it and I've learnt about it and sort of had mentors who use this approach to trading, but I've never totally done it for my own trading because I've just wanted to get in and get out and get my profit. But I understand that this is a brilliant way to really capitalize on winning trades. And I want to learn more about this by utilizing it in my approach to trading, but more importantly, managing risk along the way. And so I have calculated this. As you can see, this is quite ambitious. I'm aiming for 7 times what I'm risking for the trade, but this is based on daily signals. So I'm targeting a continuation of the downtrend. Basically, I am aiming for price to push past the previous 2 lows here on a liquidity draw. That's where I have my profit target sitting. So we'll see what happens. As you can see, on the Thursday, we did have a really nice dip down here, and at one point I was actually 3 times up in profit. But this is the challenging part of letting a winner run, is to actually let it run. And I'm going to do my best, and I'll keep you posted how that goes. So that is in both my live account with Advantage and also in my account I have with Prop from the 5%ers. And that's where I am trading the 5%ers account capital, and we take a split of profits that are made. I'll talk a little bit more about that later in the video, but if you want some more information now, I have got a separate video I'll link above so you can watch that one later, or there's also a link in the description below. But moving on to my experiment of the day that I am showing with you guys, my back testing, more importantly, back testing, letting a winner run. And what I've done here is I've used this really handy bar replay tool in TradingView, which has removed present day candles. And I've decided to go back in time about a year ago because I can't remember what price did then. So it's going to be a good test. I've taken it back to around about the last week of March. So I'm going to start it on Monday, the 27th of March. And I'm going to go through a week trading. I'm going to practice this now in this simulated backtesting environment on TradingView. So it's not using real money. Obviously, this is back in time. But what it is doing is it's going to test my strategy. More importantly, the idea of both my normal day trading strategy together with opening an extra position and leaving the winner to run, and just seeing and analysing and reviewing whether that can actually make more money, which is brilliant. That's what trading's all about, isn't it? Making more money. So you can see at the bottom here that TradingView does show any upcoming news, and it looks like there isn't any major news on the dollar until the end of the week on the Friday. And I know from experience that there is the usual unemployment claims on a Thursday. So I think it's safe to say that this could be a technical analysis based week trading, because news is an important part of my strategy. So looking at the technicals here, let's just see what is going on the daily chart. So we have a high up here. Price has been in a period of pullback, consolidating, a big drop down, a big push up, breaking these previous highs, and it looks like it's starting to swing higher. So straight away, I am looking to be long biased. In fact, this right here is interesting. Let's zoom in and look at that further. As part of the recent swing here on the daily, we have a little high. We have just about broken that, but that's sort of like a double top and a pull back down. This could be an interesting area to get long. I'm going to drop down to the 4-hourly time frame to just get a little bit more data. Yeah, so as we can see on the 4-hourly, this is that high we were looking at, and with the more candlesticks we can see that it did break above this high. It made a new high here, which means that this is the most recent higher low. Structurally speaking, this is the area I like to use to set a Fibonacci retracement tool from. So let's just use the bodies of the candles and do that. And in order to keep my charts nice and tidy, I like to highlight these 3 lines. These are the 3 areas of optimum trade entry. They are the 62%, 71% and 79% level. So I'm going to just highlight those with the rectangle and delete the fib. So we can see price has pulled back to this area and seems to be consolidating. Right, just going to unleash a couple of candlesticks because I don't trade in the middle of the night, so I can just see what price is doing. And finally, I'm going to drop to the 15-minute time frame, which is the time frame I like to use to get into trade. And if you want to see an exclusive video that shares my strategy a little bit more in depth, I will share a link to that video above. So look out for that. And maybe you're watching this and you're new to this concept of analyzing price action in this way, looking at structure using Fibonacci tools. If you are new or if you're looking for more information, I've recently published a book, Forex Trading 101. It's a guide for trading the Forex market for beginners. So I will link to that below if you want some more information. And before we can actually think about where to place an entry for a long, I need to add some indicators to the chart. So I'm going to add my sessions indicator. That will give me these highlighted boxes so I can see when the London session is and when the New York session is. I've got my daily high and low indicator, which is just a handy reference tool to save me looking back and trying to identify the highs and the lows myself. But these are key daily levels I like to use for my trades. And also round numbers above and below, this is the institutional price levels right there. So they're just marking horizontal lines at the whole and the half dollars. So as we can see here, price has opened on the Monday. It's consolidating in between Friday's high and low, but it's also just underneath this institutional price level and within this fib. So let's just have a look at what price is going to do. I'm looking for a confirmation, whether it's going to go up or down. At the moment, intraday, it has opened right here, and at the moment it has been swinging up, and now it's made a new low of day. So I want to see if it's going to break the high or break the low. And the momentum has come in with the London session, and at the moment it's broken the high and it's made a new high. So I can use this as a confirmation that the price is going up on the intraday time frame in line with my daily bias. So I'm going to set a long position, and I'm going to set it at the top of this rectangle, which is the ultimate trade entry from the Fibonacci that we set earlier. I'll use a 30 pip stop, which is below the low of the day, and for my first trade, I always aim for a 1.5 R target, which is also just below this key daily level. Now I think that price will be drawn to this key daily level, so I think it's quite realistic that it'll hit that target. But what is new and what I am testing here is trade number 2, which is going to be my runner, my attempt to get some more profit. So it's going to be the same entry. It's going to use the same stop below the low of the day. But where do I place my target? Right, let's just make the candlesticks a lot smaller, just to save going on the daily time frame here. And I can see if I go to the left, what I'm looking for is the next area of potential resistance. And these are where institutional price levels really come in handy. Now this would be the next area I think price will be drawn to, because price came down quite strong from this area. There's a lot of momentum. See this big wick rejection, there'll be a lot of order and liquidity sitting here. And it coincides with this institutional price level 123.50. So let's just see what that works out to be. 4. I think that's a good place to start with for this experiment today. I'm going to set a runner for 4 times what I'm risking, just to break past the institutional price level on a draw on that liquidity. If it works out, if this trade plan works out, I will hit my 1.5R target, which is basically my target I like to keep for the week. And it could even boost my winnings for the week from 1.5 to 5.5 if this all works out. So let's see if we get triggered in, and let's see what happens. Right, so price has triggered me in 8:30 on the Monday. New York session has opened. I had another retest there, so if I missed the trade the first time, that would have been another opportunity to get long. And as you can see, it's hit my first target, my 1.5R, during the New York session. So that's really good. That means that I am 1 trade up. Now I am going to leave this open, the second trade, because I am debating whether or not to set it to break even to reduce my risk. But given that it's still the Monday, I would like to see a break of this area here, a break and close above this, to see that it is pushing up before I go to break even. I think at the moment it could still come back. So let's just play the candlesticks on. Price is pushing higher. So at this point I would probably reduce my winner's stop to break even, just to remove the risk from the trade, because if it comes and stops me out, I've still made profit from trade number 1. That's quite tight. I think that's basically hit my target there. The spreads are pretty good on my account advantage, and also the 5%ers, so I would say that that has won. So it hit my target on the Wednesday. And I'm just looking to see how price reacted. So on the Tuesday, we had another pullback here. Could have been an opportunity for another intraday trade. And then obviously the Wednesday is pushed up. Now let's just see, as the week progresses, Thursday and Friday, if I could have made more, if maybe I've made my target too small. Let's just see what happens. So that was Wednesday, this is Thursday. There we go. Price is still swinging higher. It looks like it's aiming for that next inch. Yes, there we go. On the Friday, we actually got a break of the next institutional price level. So it went all the way to 124, which means if I just put my stop back to where it was, it means instead of 4 times, I could have aimed for this next institutional price level, which would have been 5R. But should have, would have, could have. You can never really time a trade perfectly where you get in and out at exactly the right moment. If you can, if you know a trader who can, let me know who they are. But for me, I think this is a really good test. I'm happy that it's made 4R together with my intraday trade. That's a 5.5R profit on the week. So with my live account with Vantage, that would be 5.5% in a week. That's amazing. I would be over the moon with that. And the 5%ers, I use slightly lower risk because I have a tighter stop out level on the account, but that's still a really good profit to make in a week. And I think this could be a really good option because obviously it's amazing and great to make more profits. But with the account I've got with the 5%ers, there's a lot of incentive to make more profits as well, because the sooner that I can scale my account up and hit a 10% target, the sooner that I can grow that account quicker, because they will double the account. So I'm in the hyper growth account with the 5%ers. If you are not sure what that is, I have made separate videos on it, but it's basically where I'm trading their account. So at the moment I'm in the $40,000 account size. I'm still in the evaluation period, so I've actually got a $20,000 account, but once I hit my 10% target that I am on the way to hitting, it will get increased to 40,000, and from then on, every time I hit 10% profit, they will double the account, which means I get double the profits on that account, anything that's made. So I think that this concept of letting a winner run could be a really good way to grow in a trading account and also hedge against those market phases where the market just simply isn't moving and it's not possible to make more money. It kind of could tie you over during those quiet times, like now over the Easter. How about you guys? Do you use this in your own trading? Do you have a position that you leave open? Let me know in the comments below. It's always great to hear from you. Meanwhile, if you've enjoyed the video, please let me know by smashing the like button. Don't forget to subscribe to the channel below, and I'll catch you in my next video. Thanks for watching. Bye.